Hey guys, it's Blake. I'm actually logging in right now, just getting started here for the analysis portion of phase two. I just wanted to make we just had to wrap that up. So hold on, let me just make sure I'm getting everybody logged in. Excuse me, really quick. Okay. So let's, oh shoot, I forgot to put up the bias chart really quick. Here we go. Okay, I think I've got that. How you guys doing? Everybody good? What'd you guys think of the interview with Stelios? Good, right? Good morning, Renelio. Did I say that correctly? Okay, everybody said great interview. Yeah, I know. Isn't it great that you can actually hear his experience? Like I said, I'm excited to read the book. So here you can see, and I know he's gonna send me a copy, but where? Oh, yeah. So there's our there's my checkout right there. So yeah, and the thing about is you know who the author is, you know the experiences he's had, and so it's really nice to.
Hey, I'm here as well. Hello.
Oh, hey, Stel, and so it's really nice to be able to, put a name behind an author, and that's, I think there's a big draw when you go to the best-selling authors and they do a book book signings, and just so you know, Stelios, my father-in-law, Nick, who have you ever talked to him? I know Steve has, but I'm not sure.
He's Greek, right?
Yeah, he's from Athens. He does self-publishing. So here in the United States, so he helps authors self-publish books, so they don't have to share it with the book publishers. But then you have to market it yourself. There's a plus and minus to that, right?
Yeah.
You get to capture all the gains, but it's kind of like trading for yourself versus trading for a firm. It's like, okay, you make less, but you make it all. That's kind of where I'm at with my trading versus, you get what I'm saying. But he what I was going to say is it's cool that I'm going to hopefully I'll probably read the book before I get my signed copy from you. So how about that?
Okay.
Because I bet you the book publishers will take care of the people that order them before they take care of you.
Yeah, right? They will. I actually ordered some myself because I know they're going to come earlier than the books they're going to send me. They're going to send me a number, but I'm sure they're going to come in like 2 months. But anyway,
right.
It's okay.
Yeah. I've read the first draft. It's now what, a year ago, and I can tell you it's good.
That's awesome. That's awesome. Well,
I actually read it within a day.
You did?
Yes, I did.
Wow, that you're definitely better than a 2-minute man then.
No, I'm a fast reader, and as you obviously know, I was interested in the story.
That's cool. Well, good. I'm hoping I can. I'm one of those readers that if I put a book on my and actually, believe it or not, one of the books that I have to read because I promised my kids I'd read it is I have to read Dune. Because the movie's coming out. So, but this is one of those things that I set it on my I read like a chapter and then I fall asleep. So
have you seen the first movie?
Stelios's book, I might be able to make it.
Have you seen the first movie, Blake?
No, I refuse to.
Oh, it's great. It's great.
Oh, is it?
Yeah. It's great.
Oh, it is. Okay. Well, I've heard mixed reviews, so I didn't want to go in there. But hey, guys, what I want to do is I want to get the analysis done for everybody. It's pretty simple today. I think we'll know exactly where the breaking points are in the market, in my opinion. And I think today is going to be a recovery day, but I think it's going to set up for good levels going into this next week. So I want to get this out of the way really quick, and then Stelios, I'd love to hear your thoughts on the markets too. Steve, he's been in the hospital, so you know, so I'm sure he's probably watching the analysis just to see what the hell's gone, what the hell's happened. So let's start off with, and I wanted to do this because I know the market's opening here in a few minutes, and I don't want to, do this too late before all the volatility is out of the market here in the next couple hours. So with the euro, notice how we broke through the 121 level, and then we created like a false breakdown. If you get if you read the ForexAnalytix updates, I go through a lot of this, through these, when I get up in the morning, like the euro dollar here, there's the 2 hours ago, euro dollar had a false breakdown. I type a lot of this out. So hopefully you're reading the analysis as it comes through, you get the alerts and whatnot. So anyway, we had this little false breakdown, but I'm more concerned about this trend line here. And if you just take a look from a Fibonacci standpoint, actually, I need to go from the lows. Sorry. Okay. You can see we're like right at a 50% retracement. So basically the 120.85 level, huge support. I think intraday. I don't think we should break it. Now, if we do for some reason, that means that equity markets probably turn south and we are seeing some dollar, some dollar buying as a result. Now, in my opinion, based on yesterday's move in the dollar index, that was a reversal. And we are going to be seeing, like, if you look at the dollar index, this is a hammer, false breakdown, hammer, and we are higher today. I expect us to be higher in the coming days. So what I mean by that is that the euro may recover today a little bit, but I think the euro is going to revisit 120 again. So now that we did this false breakout above the highs in euro, above this resistance, I expect sellers to be very, very strong on any move back to 121.80. So I'm going to write that down. Whoops. Okay. I'm putting us in range. Sterling, as I explained during the Pepperstone interview last night, I am expecting the sterling to go higher over time. I'd love to be a buyer in the mid 130s. We might. I'm sorry, what?
Can I see? Oh, sorry. That was me. I'm gonna mute. Sorry.
No problem, Stel. I was like, yeah, I can. He's like, can I see? Yeah, I'll show you the pound. It's right here. You want to see it?
Sorry, Blake.
I know you're talking to your daughter. It's cool. That's nice. At least you're not talking to your daughter like this. Hey, get out of here, kid. Scram. That'd be that's how I talk to my kids, by the way. Just so you know. I'm joking. And I can't believe I still have video on.
After you whip them.
Getting rid of that. What?
After
I whip them. Yes. After I whip them. That's exactly it. So the pound, we hit this, false breakout. That was a Thursday. Was it Thursday night? Well, it's actually Wednesday night. Thursday morning in Asia. We knew that breakdown was going to happen. Now a recovery back to the 38% retracement or the underside of this trend line seems likely, and that's where I'd probably sell the sterling if I could. So that's 140.25. I'm going to put us in range now from being, I think we're overall bullish, but near term, it's going to be in a range. Support today is going to be, obviously 130.85. So, or not 130.85, 138.85. Aussie. So the Aussie's recovering. Now it hit the 161% extension and also the 618 retracement of this move. Let's see it right here, right? So that is key. We should see, and as a matter of fact, I'm going to go ahead and I'm going to grab this alarm. I'm going to bring it up a little bit. 78.26 is where we should find resistance now. There's a lot of hourly supports, but it's also previous trend lines. So 78, if you get an opportunity to sell up there, I think that's the place to do it. It's amazing how in one day we can go from bullish to range almost in everything. That's how big of a move that was yesterday in the dollar. If you guys missed it, I got out of my Aussie dollar. I got limited out at 77.50 this morning, right here, because it was the 161% extension of this move. I figured we were coming down here. I didn't think we were going to overshoot it like we did, but 77.30 is now support. Okay. That should be good intraday support. Kiwi. Now, Kiwi is still outperforming. And I have to point out that you can see this breakout point, basically, it's holding. And you, I mean, you can stretch it all the way out. You can actually take it as a zone. Let me remove that. So you can do this, right? That's basically into the support zone. 72.50 is going to be support. And I don't want to put it on bullish because we are below the major breakout point. I mean, we're, kind of probing it now. But I think this is more of a dollar move, not just Kiwi. I think the Kiwi is still outperforming. That's why I think the Aussie New Zealand is still going to, trade down to triangle support here. This was the edge chart of the day, a couple of days ago, right? I think we're going back down here. But that means the Kiwi is going to outperform a little bit, but I still expect it to be sold on rallies. So any rally back up towards 73.60, that previous support right there, and these spike highs should find sellers. So 73.60. I'm going to keep us in range. Dollar Canadian, this is all that matters to me right now. We break above 127, it is bullish, period. Okay. And support now, any dip back down, you can see this is probably, if I had to guess, we're going to be developing an inverted head and shoulder pattern like that looks something like this, if I had to guess. Oops. So I would think dips down below 126 are going to find support. So 120, 125.80, 125.90, somewhere down in that neighborhood. So I'm just going to write down 125.90. But you know why? I think dips down. See, you can see these spikes over here around 126, 126. So if we get a dip down to 126, it's probably going to give us a good long opportunity. Dollar Swiss, same thing as yesterday, 90.25, resistance at 91, and it's bullish, believe it or not. But what's going to help the dollar Swiss is that you need yields to start moving up, which they are, but they need to continue. Dollar yen. This is the one thing that I am worried about, the dollar yen. And wow, Dow just came off a little bit here. Be careful, man, because the stock market just goes in a complete, an utter sell-off mode, then, which I don't expect, but you never know. I mean, we've gone very far in this last year, very far. Anyway, 105.85 is support. Next resistance is 106.75, 50% retracement long term. So we are still bullish. So 106.75, 105, oops, 85. Okay, dollar index. We took out this downtrend line. So I expect all dips back down to 90.25 to be supported. Resistance 618, 90.86, so 90.85. And then support is 90.25. So we are still in a range. We're not bullish, not the entire index, but I think it's looking constructive. And I love the fact that we had a false breakdown here, right here. I just want to make sure I'm not losing you guys. So why do I say 90.25? Because we have all of this support through here. And actually, I could probably bring that down to 90.20. But I would expect that dips down here are going to be very well supported now. So let me just write down 90.20. Okay. Give me 1 second, guys. I think what I'm going to do right now is I'm going to pick up just a little bit of Aussie dollars really fast. And I want to try to spin out of them as we approach 78 and some change. So, you know, I actually think the Aussie is going to be this. It's going to look more like this, right? Like we're going to look like a bigger bear flag. It's going to look something like this. Like that or like that, you know what I mean? So I think that we're going to just, I mean, I know we've slid a little bit, but I expect us to rally back here, right? If that, does that make any like sense to you guys? So anyway, let's, where am I at? Okay. So I am dollar MEX, or dollar Norwegian krona. This is one, if you guys, missed it in the chat room, I bought it below 835. I sold it this morning at 860. So in the chat room, you know, if your guys are there, you know I already got out of it. But I am looking to buy dips here. Now, why did I sell it? Because this is a failure of that 865 level, right? It's a failure at 865. A break above 865, I'm going to go pretty aggressively long, but I'm expecting a dip. So what I'd like to see now is I'd like to see a dip back down towards, you know, the 850 or 845 level. So let's figure out where those supports are at. Like just for a simple 38% retracement, we're talking about 850, and you can see the spike low there, 850. 50% retracement, 847, 618 will take us down to 843. So really what I'd love to see is a dip back to 850. And I think that that should offer us support. And then you guys should know that 865 is absolutely critical resistance. We break through that and it turns bullish instantaneously. I will not hesitate. On a move above 865 because now, okay, you guys have heard me say this before, so you'll hear me say it again. False breakdowns equal what? False breakdowns equal breakouts, right? So this is an example of false breakdown equals reversal. It's the same thing that we got here. Let me just show you this. False breakout here brought us to new lows. So false breakdown here should take us to new highs. But then whether or not we continue has more to do with what happens in equities and crude oil. And by the way, crude's weak this morning. So dollar MEX probing 161% extension of this last move. We're obviously probing 825. I'm going to write down 2105 as resistance. That's resistance. I would think that, you know, dips back down to this high. You can see it right here. Let's go back over here. Dips to this high should be very well supported. That'll be 2060. I hope I'm lucky enough to buy it at 2060. just telling you guys. I sold it this morning. I sold it at 20.95, I think. And I had some dollar Mexican peso and I sold it 20.95. Yeah, right, like right here. Not at the highs. I just, because it already did that while I was sleeping. So anyway, hold on. By the way, there are a lot of people that are expecting bonds to bounce here. And I should point out really quick. Let's go over to the 10-year. Okay. The 10-year yesterday probed. This is the lows from the spike. This is post-COVID lockdown, right? So we're supported there for now. I believe that we will break that. I believe we will break that lower and yields will scream higher. And that's going to be that'll be your next leg down in stocks, in my opinion, when that happens. But for now, I wouldn't be surprised to see a continued recovery, especially Friday. I wouldn't be surprised to see something that looks like this, right? We just continue to bounce around a little bit. I mean, it is Friday. Things could implode on Friday. You never know, but what I've learned over the last 25 years is to whatever you think the market can't do, it can, most definitely. Always. So you have to be prepared for that. Silver looks weak, gold looks weak. And silver looks like we'll trade down to 26 again. And I'm just going to write down our levels here, but I think resistance intraday is a little different. I think resistance is at 27.30, then 28. So 27.30, then 28. And support is 26. And that's key. Gold is right here. If you listen to my Chris Weston interview yesterday, I told him that I'm expecting gold to eventually, drop down to 1675-ish, somewhere down here, that we'd break new lows, shallow bounces, flag patterns, AB equals CD, all that fun stuff. Next support is going to be 1745 and resistance. If we end up getting a false breakdown for some reason, we'd have to break back above 1785. And then, I'd be like, okay, we got a false breakdown. So 1785. And I'm turning bearish in gold near term. And support today will be 1745. Bitcoin's trading heavy. Notice how we keep hitting low, lower low, another low, lower low. Now, yeah, it's a false breakdown. So right now, so we could, quite possibly, get back to 52, but we're continuously making lower lows. So just keep that in mind. 50% retracement is at 43.38, but as you guys know, 42,000 is the big kahuna for me. So that's all I have to say. 42K and resistance is at 52K. And that's it. I don't think you should be doing anything with I think it's bullish while we're still above 50 or 42,000, but I think this is your sandbox that you play in with crypto, and it's still bullish. The S&P, I don't feel so bullish about it right now, but let's take a look at it. One of the things that I'm worried about the S&P is this megaphone pattern. I don't like yesterday's price action was obviously bearish. I don't like how we're making lower highs. Obviously support is at this ascending wedge support, and I can't get bearish while we're below it. So while we're above 3,800, I'm going to keep us in range. Resistance, probably any move back up towards, well, you got 3870, maybe 38.90. See all this previous support spike lows down here. That might give us a little bit of an issue. Should we get back up there? So I'm going to write it. But I think we're in a range now. So just be careful if you're, you know, be careful if you're uber bullish the S&P, because I'm not now, and especially if we break through this wedge support. So your bias chart is finished. Ron said, thank you for sharing your story on Face. Time to get back to your family trips to the Prescott Valley area. You know, Ron, you're right. You know, I've actually, you know, not done a lot of trips because I've been like, I can't get away. It's amazing. You know, it's amazing how that happens. All right. But there's your bias chart. Stelios, Steve, how you guys doing?
I'm here. I'm very well, thank you.
I feel like I've been talking forever, but you know what? I haven't left this seat in like the last couple hours. I actually need to go use the restroom, so I'm going to turn it over to you guys.
I'm going to take the screen, and I'm sure.
Hey, I just want to say thank you all for you know, being part of the ForexAnalytix family. I hope you enjoyed the interview with Stelios and myself today. And I know Steve is listening in. So Steve, we wish you the best. We hope you get better. If for some reason you missed it, oh wait, I still have the screen, right?
Yes, you do.
Okay, I'm just gonna look at platinum really quick for Amira. But real quick, if you missed for some reason the analysis excuse me, the interview with Stelios and myself today, and you didn't hear me talking about like trading for Gelos, or you know, you didn't hear Stelios explaining about his Truth in LIBOR book, the recording will be available for you guys in the next couple hours, and go back and watch it. Alexander said, Blake, how many screens do you have in there in the background? Your glasses look like a Christmas tree. I've got 8. I look at a lot. I mean, and look, I've got to look at a lot because I'm monitoring the markets for you guys, and not just for myself, but for you, you know, so I can report back into the chat rooms. Hey, look, this is moving, that's moving, you know, hey, somebody said this, somebody said that, you know. Anyway, platinum, 1160. I think it's probably, this is like the support level here, but let's do one last thing really quick before I let you go. There's a trend line that comes in right there too. And then let me take the spike low here. Just one last thing. See, that's a 50% retracement. Comes in right here at 1150, right at the breakout point from that spike low to that spike high. And there's a trend line right there. So this area right here, this would be, you know, look, if you want to be long, that's probably your best risk reward to be long. If that breaks, I don't think you want to be long.
We're getting a blue light special in the metals, Blake.
Yeah, you maybe. I think the blue light special might be on, but the blue light special might go on for a few weeks. That's the thing. And
I doubt it's going to last that long. Yeah, we can see a little bit lower prices. But I doubt it's going to last that long. I think that the whole hypothesis that higher yields is going to be really a much higher dollar, which is going to mean lower metal prices. I think it's flawed because the Fed keeps reiterating that they don't intend to do anything. The market, for some reason, doesn't believe them. They actually think that they're going to move sooner than they're saying they're going to move. But I think that soon enough they're going to realize that the only thing that the Fed is willing to do is actually accelerate quantitative easing so they can absorb more bonds. And
they're going to actually end up doing yield curve control at some point, and at that point is when
and accelerate quantitative easing, because don't forget that unless they accelerate quantitative easing, there is not enough demand to absorb all the supply that's coming.
Steve, I got to run to the restroom, buddy. I can't get into a debate right now.
Go for it. I'm going to share my screen. I'm going to share my screen. And hey, Steve, don't you have a nurse you have to take care of?
No, they come in and out. I actually just got my permanent nurse. My wife just came
Oh,
over.
nice. Give her my my love. Hello, Katerina. So big day yesterday, and I don't think we're quite there yet. Remember, I was talking about yields and the S&P. I think I've been saying I want to see, there's this big zone in yields. I want to see a convincing close above 150 in yields and a close below 3,800 in the S&P. They're trying to bounce it. I think there's big support in 3,800. It's a nice big round number as well. But we're trying to get over the edge, but we're not there yet. So I don't think yet anything has changed. Having said that, metals are weak. They may be trying to tell us something. But I agree with you, Steve. I think we might get a few more days or weeks of weakness, but that's going to be, that's going to be a gift if we do.
Yeah, I think the whole premise is wrong, having to do with the metals. I mean, the market believes that higher nominal yields will mean higher dollar, but already just look at the move in the yields and compare it with how much the dollar has actually moved. And it's like, a minuscule move in comparison to the explosion in yields. And I think that tells you all you need to know.
Yes, absolutely. Yeah, you're right. The dollar is not doing that much, right? It's, also, we said yesterday, there was a friend who was asking, what would you do? What would you use as a risk of trade? And I think we all agreed on commodity currencies like Norway and Aussie, Kiwi, and obviously Mexican peso as well. And they've been hit pretty hard. And the Aussie, look at that. I mean, 2 daily candles, which look very, 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 very bad. But again, I want to see yields go above 10-year yields, go above 150, close convincingly above, which will probably mean that the S&P goes below 3,800. Then I'm going to start looking to perhaps put some risk-off trades on.
There is a chance. I mean, the chance has really increased.
Yes.
That we are near the event we were looking for, meaning the event that will actually finally get rid of all the short-term froth and enthusiasm and complacency and all the last-minute momentum retailers that try to jump on board. So yes, that might be it. But as I've said before, the Fed is not going to let it get out of control. I mean, if this goes on for a few more days, which, to be honest, a few more days might translate to a rather decent move lower in the S&P, for example, right?
Yeah.
But I think that afterwards they're going to actually do what they know how to do best. They're going to make their balance sheet explode once again and absorb everything.
Yeah, which is crazy, right? I mean, we're obviously all waiting to see what the Fed's going to do. But look at this. I mean, in the grand scheme of things, it's just a blip. But you can bet they're already thinking what we're going to do, how we're going to intervene. I mean, why not let the market come back down to 3,300 or something like that?
Because if they let the market come to 3,300 by not intervening in what the yields do, the yields will move in such a way that the market will never stop at 3,300. That's why.
Yeah, that's likely. Yeah. Anyway, we wait to see what the Fed's going to do. I doubt they're going to do anything today, but obviously, the markets are a little bit nervous today. They're trying to close the week on a high, but we still have a long way to go. But okay, perfect. I don't have anything else to show. I mean, I was looking at.
Let me do our friend Amira here the favor. Let me try to share my screen and see if I can show a couple of things. It's not easy though, because
don't push yourself. Oh, we can.
No, it's just I have to use the hand that. I mean, idiotically, first day I came in here, they had to put like a permanent line in my hand, and I don't know why they never told me. Something, you're gonna be here, from what we see for many days. What hand do you want to be using more?
Oh, they didn't ask you.
So they put it on my right hand
Oh, Jesus
instead of
Christ.
putting it on the left. And, you know, I'm not supposed to like bend it that much because it stops the flow of, you know, IVs and everything else. But in any case, here is platinum. And, you know, so far the move lower is orderly, and I'm still keeping my eyes on this 1170 area of support. So you know, this might actually prove to be a very good area for a reaction. Now, if this gives way, you know, we can have a more complex reaction lower, but I still strongly believe that you know, the move lower in all the metals is going to be corrected. And for example, taking gold as like the most liquid of all of them, nothing has changed. I mean, we were waiting for a new low since we were building this little bear flag over there. We now have a new low, but you know, we're still moving in an orderly fashion within this larger channel. I can even see the possibility, if we take a little bit longer, that we can even move slightly below 1700. So what? As I said to Blake, I think this is what he used to call a blue light special, meaning I think, you know, these moves in metals in tandem with risk assets are going to be amazing buying opportunities, because I think that once the market figures out the inevitability of the Fed's action to tame this normal market reaction, I think that monetary metals and commodity currencies and commodities will explode higher once again. So I think, you know, the most important thing is for people not to actually get extremely enthusiastic that we've seen some kind of a high and load the boat in the other direction. They should keep in mind that, you know, the direction of the trend hasn't really changed. So I think that's the most important element.
Cool. Okay. All right. We don't want to pressure you too much with all this stuff. So let's, I think we can call it a day, and we will see everybody back on Monday. Steve, get some rest. Make sure the nurses don't come when Katerina is there. And
they come so frequently that unfortunately it's unavoidable.
All right. Well, I love to. But
you know, she's threatened me. Like, you know, if I see you flirt with. Yeah, she says she's threatening them as well.
She knows what she's doing.
She goes both ways, you know, to make sure.
Okay. Well, I love to you both, and we'll see everybody on Monday. Thank you, guys and girls, and we'll see you.
Bye, everybody.
Have a good weekend.
Have a wonderful weekend. Bye.
1 minute before the release. Stand by.